Hi, welcome to our channel. As always, the information brought to you here is meant to entertain you about the real estate market in Canada, and in particular, the housing market in Vancouver and Fraser Valley. We like to ask for your support by giving us a thumbs up and subscribe to our channel to be notified our future videos. This video is brought to you by 3Q Marketing Services. Today, we like to bring to you an update on the detached housing market for Greater Vancouver. During the frenzied real estate market run-up back in 2016, average home prices in Greater Vancouver peaked in May 2017 at $1.83 million. Subsequently, the average detached home prices drifted lower to $1.468 million in February 2019. The lost in home value was over $360,000. In response to the pandemic, the Canadian government injected massive liquidity to the market. According to Robert Hogue at RBC, during the second quarter, Canadian households received $56 billion from the government, while they only lost $23 billion in lost wages and salaries due to the pandemic. The market received a windfall and a net gain of $33 billion. The additional income, when added to the pent-up demand during the shutdown, and the pulled-forward demand is attributed to the massive late summer and fall rally for the Greater Vancouver real estate market. There was a shift in buying interest as a result of the pandemic for larger spaces and lifestyle needs for remote work. The detached home buying interest was concentrated mainly in the entry-level markets. The demand for single-family detached homes have been rising since the second quarter of 2020. In Greater Vancouver, buyer interest was mostly confined to homes under $2 million, especially homes in the $1.2 million to $1.5 million range. The average detached home price for Greater Vancouver for September was $1.71 million, and in October the price ended at $1.714 million, which is near to the top of the wedge. Whether the strong home sales can be sustained through the fall and winter months is yet to be determined. If demand fails to keep pace with the supply of new listings, total sales can drift back to below the 15 years average sales. The current average listing contract days is favorable. Similarly, the average home price is near to the upper trend line. The sales to active listings ratio is hovering near the upper channel, and there are no signs of market weakness at this time. But, some weakness is apparent in the condo market, where inventory had increased significantly, while new listings for detached properties added little to the total housing supply. We expect the need-based buying interest, and pent-up demand for detached homes to slow down, as most of such demand is fulfilled. On the other hand, the growing need to sell is expected to increase as many of the homeowners who are on deferred mortgage payments will be forced to sell their homes for financial reason. The provincial NDP government now have a majority and a mandate to continue its past 3.5 years policy. During the last extended 1990s NDP leadership, home prices declined 26% from the top to the bottom. With this as a historical perspective, home prices declining under an NDP government may be expected. The two divergent trend lines entering into the apex of a 4-year trend cannot be overstated. It will not take long for the market to break out of the trend lines. The probability for a downside breakout is high due to the weakness in the economy, over-leveraged homeowners, and need-based buyers not likely to step forward to support the market. Supply is already trending up, and adding the need to sell supply of homes, the market can break to the downside in a hurry. Those homeowners who purchased during 2016, with an average $1.784 million price, will likely see their properties at values less than what they paid for 5 years ago. Thank you for your support. Kindly give us a thumbs up, and subscribe to our channel, to receive notification when we post new videos on the Vancouver housing market.